What is the strategy of the Bitcoin treasury company? This is off of Strategy. StrategyB, the company that's acquiring almost up to 1 million Bitcoin now. So what's their strategy? It's pretty much create their own legal money printer and issue shares or debt into the market. All this is legal. It's not a Ponzi scheme. It's what all public companies do. So, there are many ways to do it. Let's have a public company. There's many different examples I have here. Pretty much, the first one is of Marathon Digital Holdings. So you have your own public Bitcoin mining company. Issue shares use those shares, proceeds from those shares into the market to buy miners, pay down the electricity, and stacks Bitcoin with the mine revenue. Classic example is Marathon Digital Holdings. This one is, I would say, medium to high risk, just because you have to issue more shares, and especially in a bear market, those shares depress the value down when you even more in the depressing situation, and you gotta issue more and more shares in a bear market when the when everything is going not that well. Even though you might be earning more Bitcoin, because not many people are mining, but it still depresses your share valuation. No one wants to buy your stock at the best time. So if you want to stop the spiral of despair, you have to sell your coins at the worst time. So yeah, most likely have to sell their coins in a bear market when they can't issue shares anymore. And then that's the worst time to sell it. So, and then also the mining equipment is worth less and less. And usually you have to do a capital raise is easiest at the height of a bull market when the miners are most expensive. That's when you get the most money. But that's when they also can acquire the most expensive miners. So you get less. The shareholders kind of get screwed over, and then so it makes it for a horrible investment. So you pull the money in at the peak top, then crashes, then goes down. So, but you can still acquire quite a few Bitcoin, especially if they can just hodl all of the proceeds. But I say the risk is probably medium to high. And then there's the famous micro strategy, where you issue shares at the market and buy Bitcoin. This is pretty much just like any other public stock. Just issue the shares into the market and then hope the dilution is less than the number of shares. So issue shares at the market, the bull market, hopefully you get more Bitcoin per share. Goes up. Risk is medium because more shares push the share price down, simply down and sideways in a bear market, in a great long bear market, and that could negatively affect the price, especially if Bitcoin stays sideways for a long time. Let's see, plus 5 years, investors lose face, and then you can have a death spiral where they have to sell their coins, and then shares become more and more worthless because they think, oh, they pivoted or something like that. They don't believe in Bitcoin anymore. Everyone just sells out, and the shares drop further. And then, but this is also at the lowest tier of the capital stack. So as a risk if they go into a free fall, can never be recovered. And then those shares are worthless, the company is worthless. The same with they can also issue convertible shares like SDRC, SDRK. Or no, SDRK, sorry, the convertible ones. So they pay a dividend, and all of a sudden share MSTR hits $1,000 or whatever, and all those convert into there. And then they also pay the dividend in the meantime. So that gives like people big incentives, like, oh, Bitcoin goes to $1 million and strategy shares will go to $1,000 per share. And they can convert all of those into it gives people that kind of call option. But the risk is still medium because they still have to give out those dividends, especially if the market's going sideways or the market's going down, especially for a long time. And then they have to decrease their cash pile, drain the dividends, and then as they drain the Bitcoin, then people think, oh, they might have switched, and they sell their convertible stock, and then it's not as liquid, and so it's safer than buying an option for the investor, but it's also because you get the guaranteed dividends, whereas options you don't get a dividend. Whereas it's still risky because if the underlying shares expire worthless or become worthless, and then the whole share is and there's only like maybe 1 or 2 years left of money, and then the STRK will be worthless as well. I'm sure the price will be very negatively. Won't hold 100 in that case. So I would prefer like MCR to have like 10 years of cash on hand, and then they can pretty much return all the cash to the investors. At this point, now they only have 2 years, so it's kind of like once they have 10, this will be pretty much a zero risk because you get all your money back. But now it's pretty much it's fairly risky, so risk is medium. And another way is just use the corporate treasury to acquire Bitcoin. So you just have a public company use excess cash reserves to buy Bitcoin. That's what MSTR did in the beginning. The risk is very low. Company still provides the product, still sells software, whatever, and then still pays his bills and employees in cash and just stacks Bitcoin with the rest. As long as the company can pay their bill and everything, that is strong. That's a good plan. So use the corporate treasury to accumulate Bitcoin. And have a portion of its free cash flow just to buy Bitcoin. Like as long as you pay your bills, the same as Block, who converts like 10% of the net income directly into Bitcoin. Just like, oh, we can pay our bills, can pay our employees, and now what's left over just directly convert it into BTC, and then some get cash, some goes Bitcoin. So risk is very low because they don't touch your cash pile. However, they accumulate Bitcoin as well with a portion of their net income. Perception can be negative from outside Bitcoin, but however, it's really net positive because their balance sheet is growing exponentially in fiat instead of going down. Whereas normal companies use bonds, which is bonds or cash. But yeah, same as cash and Bitcoin, and will outpace the bonds. So, and in the future, this will all play out. So all companies have to do this. So that'll be a perpetual bid on the Bitcoin price. So accept Bitcoins for your products and put it into the treasury. So not everyone will pay a public company accept Bitcoin for its products, put it in directly in reserve. Like Tesla in 2021, I know they briefly accepted Bitcoin for a short period of time. Not sure if it's still the case, but and they switched to Doge, and that could probably be a who knows what they're thinking there. Elon loves dogs, so yeah. So the risk is very low. The same as kind of using a portion of your cash pile. So you just kind of like, not everyone pay in Bitcoin. So you just like, oh, say they get 5% Bitcoin. 5% people pay in Bitcoin. And then that just goes straight into the cash reserve. They don't really have to touch that. And pretty much it just goes on to the balance sheet. They don't have to accumulate other way from OTC desks or whatever. So issue desk instruments or warrants to buy Bitcoin is like Metaplanet. And risk is probably medium, even higher than at the market, I'll say. So so more and more debt kind of push the share up, especially in this, and push the share price down, especially in the sideways market or even down market, you can go down. So the same as before, you get into a debt spiral, and then you can't pay off this debt. Too much debt, especially if it goes sideways for a period of time. The share is going to free fall, never be recovered. The same with warrants. Warrants are more like a call option on the on the stock, and they do not convert into common shares. Then it kind of leaves like, oh, the company's name is now worthless. The common share is now worthless too. So that's the same thing where a death spiral occurs. So that's why I would put like MSTR above Metaplanet and like Square, even though they probably can't accumulate as much Bitcoin. Square and Tesla, for their adoption strategies, they can still accumulate a significant amount of Bitcoin. But just the risk wise is probably like Tesla, Square, probably lowest risk. You want to like buy into like a Bitcoin company. And then MSTR probably second. And then you can go down the list of different companies. Probably Metaplanet. After that, riskier play. And some of these other BTC treasury companies that even more risky. We haven't heard of them. Don't know the CEO. They don't. Not as public as Strategy. Then I'd probably do your significant due diligence and research before investing into them. Okay, now we can just visit some of the projections I've worked out for Strategy, because like numbers are insane. I don't think like this is like there's just so much capital out there. Like especially to look at by 2036, 8 million coins. This is with a modest 30 to 40% increase in gross of BTC's price, up to 564. They're just going to be hoovering up the coins. That's the base projection. BTC grows like 40% over the next 10 years with some 35% drawdowns, kind of following the 4-year cycle. So projected, they'll start accumulating like 1 million coins a year. It just seems like almost 2 million coins a year. And I don't know how this won't put like a supreme supply shock onto the Bitcoin price. So it's just like, that's what Michael Saylor said. When it gets to, it's almost at 1 million already. So it gets to 1 million coins, Bitcoin will be $1 million. And then by the time it gets to 1.5 million coins, Bitcoin will be at $10 million, something like that. So I hear Bitcoin's at 500,000. It's 8 million coins. So that's the base. And the bull is even crazier. That's it. You hoover up 82% supply, which is like not realistic even. So like I don't know how, but other people seem to sell this many coins. Like, but I guess it could happen. Yeah. Everybody's got that kind of diamond hands, where everyone has paper hands. So like you get up to 72 This is up to 50% gross, 40%, 50% drawdowns. And you see this share price. Oh, it's up to 1,000 here. In the base case, bull up to 2,000. Yeah. So it's just like, and how many trillion? So let me see if we find the total. So here we got a 2,000 million billion. Yeah, and then it looks like a 2 trillion. 2 trillion market cap. Or is this 2,000 trillion? One of the two. It's like, whatever, it's insane. Oh, no, that's just for stretch. Here's the actual market cap. 61 billion is the market cap as of when I made this video. And then they'll get up to 2 trillion. Here they'll get up to 5 trillion total market cap. This is, I just, was what Michael Saylor said. There's a amplification ratio of 50% for all these others. Just for SDRC, I didn't look at any of these other ones. So SDRC amplification ratio of 50%, starting at the base right now. Of a couple months ago when I made the spreadsheet, and then so 5 trillion. Here, this is the bear market, so it's 1 trillion still. Bear is, this is all modest, like 25% share growth, and you still with a MSTR of $500. I kind of just put these prices in, like for the share price, so projection, but he still says he gets to 55% of the supply in the bear market with 11 million coins. Like, this is no way you can hit 55% of the supply, and Bitcoin stays at $176,000. There's just gonna be a Bitcoin out there. Yeah. So this is like a more realistic power law type of supply crunch. Still, it's 72% of the supply. Goes up 80, 70, drawdowns to 50, 60%. Numbers are just insane. It's like, I don't know how. Yeah, it's complete Bitcoin singularity here. If they actually play out this playbook, just follow the 25% share growth. Yeah, I don't see a stopping either with how they've been accumulating. They got SDRC in the bear markets, MSTR in the bull markets, and they kind of balance it out. So I expect when the bull market gets going, more people will sell their SDRC, go into MSTR, and probably go at the wrong time. So, and then they'll probably get wiped out. So, whereas you just were to hold on to your MSTR or hold on to SDRC and kind of like, and convert them back and forth when the share price is low and the bottom of the bear market. Then you probably work out like a bandit, but then you gotta be a genius at timing the market. So I say if you just like have like the 50% rule, and then you try to keep them or 80-20, whatever. You have 60% Bitcoin, 20 MSTR, 20 SDRC, and you just try to keep them all even. You'll still make out like a bandit. So, as you can see, I don't think they actually hit this supply. Like, there's not enough I think the price will just go like completely parabolic. Like this is with the average requirement price of 1.2 million. So in 2036. So that's still pretty good. And you get like you would get a so that would hit like the 1 million by 2032, like the project for the power law. And then it'd be a drawdown, and then go right back up above that value. So, but still, they still get 72% of the supply. I guess people still don't understand strategy and understand Bitcoin. And people are still willing to sell their shares for fiat gains. And the more people want to do, the more Bitcoin they'll hoover up. Just enough coins. I see massive supply shock coming in the future. Well, we found this at all useful. Feel free to zap me a few sats at Andre@rizfall.com. Thank you.